What is going on, everybody? It is Trading Trends with John Salama, CMT, and Rocco, the all-time high Maltese dog. There are new all-time highs today in equal weight and healthcare and dividend stocks. So it looks like a beautiful rotation after the market, hit all-time highs, as we said, exactly with in terms of targets and where the put wall is at 775 in SPY. We'll take a look what it means for the tape early throughout. It's 12:10 p.m. Eastern time, and volume is absolutely wowie. It's very low, 25 million. We'll get to it, what it's on pace for. Here first, the chart or the graphic to open up. All right, here we go. So Brazil and China, they're not enjoying buying today. They're down between 2 to 3%. So parts of emerging markets are suffering. But guess what? Look what's going on over here. New all-time highs for defensive dividend equity. We're looking at the Schwab ETF, SCHD, all-time highs for XLV, healthcare all-time, typically, defensive and equal weight. So again, that's the average, not average, literally every holding in the S&P 500 companies. So you have a beautiful, masterful rotation from pretty much almost every part of different sectors and complexes. Also, I thought it was interesting to note PGX, the preferred stock ETF, 52-week lows, I believe, on that. Obviously, what bonds are doing, and they trade pretty similar with that. So let's get into the charts. Oh, yeah, also, a morning show with D and Steve Straza. Always good stuff if you tuned in. Cool. Okay, let's go to the other screen here, and we'll get into it. So, yeah, but we discussed a lot of stuff that we're going to see with the charts right here, right now. You'll see what I'm talking about. We'll talk about the big mover. SpaceX down 4%. This one still ever so volatile today, trading from 130 to 139. Meta up 2%. Google down 2%. Amazon down 2%. Oracle down 4%. A lot of weakness there. And that is it, really. Again, as I said, for the S&P, we are looking at, for about almost 3 hours in, 10 million shares. So as I said, 25 million or so, about half day equivalency for a summer Tuesday, but that's okay. So this is let me go to 30-minute candles here. So short term, we peaked yesterday, if you recall, yesterday morning at 775. We talked about the magnetization of the wall right there at 775 and the support and the secondary and tertiary support that we have underneath. Also looking at option chains and explaining, basically where you see purely think of it as a magnet. It's helpful to see where positions lie in terms of where a lot of credits or sales have taken place. So back to SPY. So we peaked then at 775, got a little bit Dikembe'd, and that's where we've been grappling ever since. A little bit from this morning. As I said, it's only 12:15 here. The morning was the peak, and they've been selling ever since. And a lot of weakness at 11 a.m. once we took the short-term VWAP. But once we start trading beneath that with just 773 half. So now, ugly looking candle right here, actually closing near the lows. Looks like we want to target something like a 771 handle, which is only $1 off from here. Zooming for that, so for the day, probably going to grapple with 773 with this weakness, and looks like some kind of a floor, potentially as low as 769 if they really sell. It's possible, but the volume is very low to get a real push or pull in the tug of war here. So as I zoom out, let's get away from the noise of just a noise of a quiet, that's poetic, day. So as I said all along, pretty much this rally for me, in terms of cycles, began on July 30th. I know JC called a lot of my trades today cute due to the calendarization of them playing the spreads. You can always just take the one leg and not sell the other leg as well, and it's just straight long. Just be prepared to take it off and have a risk management system in place because they're, they can expire. They can lose value pretty quickly sometimes. Hence the sell side for the short-term trend contra potential. So for me, this leg of the SPY rally started on July 30th with a VWAP of 740. I actually just looked at one of my messages to a trader, but enough patting myself on the back. But it's exactly playing. I said we're going to go up for about 2 to 3 weeks and crawl or climb 3%, and vol's going to come off by about 10%. It's truly pretty much that, 740 in SPY to 772. That is 32 points. Pretty much, in line. cycles, because we don't do it from the absolute low. That is not, 4.3%. So surpassed as the market usually does. And I thought, like I said, I didn't get to really go into this or talk about it much this morning, but I thought this was going to be a longer-term rectangle in place, as I said, from the prior highs from June 2nd. And guess what? August 4th came around. It's 2 months of consolidation. That's all the energy needed. And typically, you're going to get a lift. And that's when technical analysis helps me. That old, and I did talk about this morning, that new ceiling is going to be your old floor. So again, back to the cycles. August 15th was what I was looking for, not to really rise into a crescendo. My top has been pretty much the top all along, combining it with that options reading right around, even if I extend it due to the FOMO and that kind of a thing, I can, get you about 776. So that's about $4 from here, inside of 1%, of course. So not too much. And again, we peaked at 777 essentially 6 days ago. So not much more constructive looking candles, especially as you land that 769 floor. As I said, I'm expecting bullish accumulation to end on or around Friday, as I said, with a target of around 776, and then a mean reversion into the end of August, right around that 755 area. And look at that, where that lines up, just the week of the former all-time highs, June 2nd. So again, I think that's what's going to happen. It's going to most likely correspond with the neutrality point of 50 RSI, a totally healthy digestion. What you're seeing essentially right now in the market, down 10 bips. Vol, last I checked, is still coming off the market, still selling fear, saying we ain't never scared. And those are market terms. Look at the RSI. I do also want to mention, this really stands out, like in terms of an EKG. Since August 4th, 7 days ago, the RSI is just stalemate at 64. That is elevated. That is straight up. That's what I'm seeing. I mean, I'm going to a concert tonight. That is a line just for beer or merch. It is a line and it's staying long, and they're selling something good, and you're going to wait. Okay, it's either an autographed vinyl or a double jacket and coat. That is what that looks like to me. So typically, when you have that pressure, they're saying we are holding here. Okay, specifically that 770 line, and it probably does go a little bit closer to that 776. Don't forget, we have a big CPI number tomorrow. This could be a catalyst either way. As I said, I am expecting this energy to end itself on or around Friday, very near our target, and then reset towards the end of the month around 755. And I do believe we march towards 815 SPY in a handful of months. So yes, bullish, and usually corroborated with all-time lows. I don't know if I got that bullishness across enough or at all maybe this morning on the show, on the program. But let's get into the charts, and we'll get into all that matters. So there you go. I think an attractive level is going to be selling 750 in SPY. Roll that out end of August. I think you get paid. Just do understand you do have a catalyst potentially tomorrow in the CPI as earnings start to get behind us. All right, the big trends today. I know it's a quiet day. This is interesting. There is no larger than one sigma movers. So it should be, if I'm not such a babbler and Rocco doesn't take over all the screen time, this should be a shorter program. There are no gainers larger than one standard deviation. That screams to me absolutely digestion. The buyers are just saying, you know what, we bought our defensive, we bought our healthcare, we dabbled in all the miners and oil and silver. Let's just keep our pockets a little bit drier, and let's now maybe take profits on some short term. So I don't even have any winners for the day. There are none. Multi-sigma, everything is built in less than one standard deviation. Go look it up. At least as of this time of this printing at 12:20 p.m. Let's get to the loser of the morning. There are 2 to 3 areas, and they're emerging markets. Brazil, ugly, peaked April 14th at $42 and fell into essentially purgatory to hell. There's different levels of Dante's circles depending. June 5th, I would say, was definitely one of the circles. And then it just mustered a very hard, like a bench press. All this work all the way from this floor of about $34 all the way to $37. And guess what? The give back, as usually happens in trading, is about 5 days worth. Okay, that's crazy rally. As I said, 2 months or 8 weeks, give back in 5 days. Today down 3% in Brazil. Brazil's been a horrible loser, second worst actually week over week after volatility itself. So you could actually say Brazil has been the place to lose money in the past week. Sorry for all the Brazilians there. The chart looks very weak here. I never like to see this with multi-month lows. You have to hope this kind of Swiss cheese defense or a hold holds up at 33.5 here. You got to be careful there. I'm not sure I trust it. EWZ, why are we talking about it? Out of everything they're liquidating today, Brazil is the biggest one. I would expect this to base this, coming week. I thought they were going to stick it with a 35 handle, to be frank, because this 200-day moving average also is still going up by about 2 cents a day, not 2%, 2 cents a day. Peaked in, like I said, mid-April at $42. You'd think that $36 would serve as some kind of a magnet, and here you go. Yeah, this is going to be somewhat, I don't want to say an easy trade, but 33.5, if it sticks, it should get back towards $36 over the next 3 weeks. Probably going to be frustrating as all hell. If the 33.5 breaks, I would look forward to then not totally fall off, Spider-Man style. He does some crazy jumps and things in the new film. But 32, I would think for a floor. And I'm not so sure they let it get oversold, but this one's been down 3 days in a row, 4 out of the past 5. Yikes. Look for that to base. I am believing, though, in I don't know if you want to call it a dead cat bounce, but I do think the next move is going to be onto 36, and it's going to equate with that short-term or long-term ceiling of a 200-day moving average at 36. So Brazil looking like a nasty picture, not getting the flow. Maybe it's all one AI story. Not really, though, because there's defensives and healthcare, and Brazil is just not getting the love. Obviously, it's a commodity-rich nation, and oil is very headline-driven. Every day we get closer to the end of the war. You can, maybe look at straight up. I'd have to do a straight up correlation, U.S. barrels of oil versus Brazil, the futures, Bovespa, instead of, any kind of noise. But, and I'll get a real opinion on a correlation. But this one really falling out. Last thing on this, this was above 50 RSI for a month straight with a rising 200-day moving average. Give a dog a bone. Love that. And right here, it's been under 50 RSI underneath a 200-day moving average, closing on the lows. So it looking pretty ugly. If it breaks 33.5, it is going lower to about 32. Otherwise, I do expect this floor to hold in. What trades would you do here? I would be a little bit careful. There's going to be a little bit spicy. I don't trust the defense here. You could sell the August 28th if they're listed 30 and option and liquid 33 puts. I'm not even sure going to pay a ton, but you want to give yourself room. This thing's been closing on the lows for the past 4 out of 5 days. It's real ugly in Brazil after getting Dikembe at $37. So mixed ugly picture in Brazil. That's how I would do that one. I wouldn't play, straight up calls. How we know the Brazil picture bullishly will have returned? You get 5 closes above $36. Wake me up when it gets there. For now, it's under by $2. Half of those losses come today, down 3%. Next, China, not one FXI. That sounds like some weird BTS spinoff band or McDonald's band or something. FXI down 2.25%. They know exactly what I'm talking about. The Chinese of living in, who knows what I'm going to say. No, I'm going to say under the 200-day moving average. That could have got crazy. I hope they didn't cancel the program. October of last year, so this peaked last year like Bitcoin when Bitcoin was 120K, so it was different environments, absolutely, different growth and everything else. So that we peaked last year in FXI at $42, and then truly this thing fell out of bed, and you can see that visually at the end of February before the war, okay? And then this thing finally bottomed, got oversold, end of June, down to $31. And now it's looking like it's gotten to Dikembe. Also, ironically, at the same price level of $37. Just a coincidence with, I believe, what we just said in Brazil. And now, ugly give back. And this is what we said before about FXI, and I'm glad the next chart's KWEB. We said, when do you trust this story? You could be an absolute gambler. And I said, you can suggest buying the November calls. That's if you're an absolute gambler. I said, I'd rather be a lazy trader and wait for this to start closing above $37. Look what happened from the, Aesop's Fable or whatever you want to choose. $31. It raced to 36.5. Awesome. The 200-day moving average is still falling. Okay, I don't care if that's whatever underlying this says here. Sugar, orange juice, Microsoft, China. That is still extremely heavy. 200-day moving average 37.15. That has to grapple with that, and it's had a hell of a run. Short term, China. This one has already begun its descent. I think this one, next stop is 35 even handle. It's not too far away. Down 2% a day, or down 2% today. VWAP 35.70. It's pretty much at it now, but underneath it by 6 cents, which is 4 cents above its low of day. Don't like this one. I think this one ultimately finds a floor at 34 even. I think you could sell the 37 end of August calls if they're listed, the August 28th. Otherwise, you can look at the October or November 34 puts. I just don't like the story. The confirmation really for the break, like the dam breaking, would be a move underneath, a close under 50 RSI, which would more than likely equate with a close under 35.40. It could happen today if they start to bleed it more. That's China. Let's go see the dispersion versus the tech, the high growth tech sector, subsector of China. Oh, goodness gracious. The ball's absolutely rolling off the table. It peaked the same day, obviously, as China. And you're saying, it's the same thing, right? No, some is Baba, Vips, which is like their Amazon and such, PDD, and the other ones has China real estate and obviously different parts. Whew, I should take a breath. Okay, so this one fell into its purgatory, honestly, end of January, so way before the war. Oversold. I mean, right here, end of June, same exact peak, 1-for-1 almost correlation in that top, peak to trough. June 26, $23, a monster rip to 29 multi-month highs, and now 28 handle. Most likely what I said for China FXI mainland is going to drift down to this. I said what you want to see if you're long KWEB, and this is a good point. This has days ahead of it. This has a lot of work to do. But what I said before was you want to see a medium term moving average that's been falling, at least stabilize, and you're starting to get that a bit at 27 half here. If not, you're seeing it trade higher in the 20-day moving average, which is very constructive. Hasn't seen it in a while, and also the 50-day moving average. So that's very positive momentum. So what I'm thinking what's going to happen is this short-term ceiling has been reached at right around 29, around 29 quarter. I think it's happened. So $1.05 away from where we currently reside. I think this will descend towards around 27.5 to 27.75. I want to see it hold at 27.5 right around there and keep these moving averages go higher and above 50 RSI. And then guess what? This is since July 7th, a very, very constructive story, even given the very heavy backdrop. How do you play it short term? I would sell these, give yourself a little bit of room here because this is always headline risk as well in China. Who knows what they're reporting over there? But you can more than likely, in my opinion, sell the end of August 29, half as close as possible to that strike. Calls. Alternatively, I think this is going south of the next 2 to 3 weeks to a 27 handle. You can go out by the October or November 27 even puts. Again, all look up everything, not financial recommendations, advice, etc. But looking for the charts and constructive. When you give them 52-week low and oversold reading, and then you immediately go back to above 50 RSI and you hold it there for 4 weeks, that is very impressive. It could be that it's done, it's finished its hangover. But again, I always want to respect a super heavy 200-day moving average. It still has a meeting with Cyclops up there, 31.5, so which is 10% away, and it just did a hell of a lot of heavy lifting. So that's a story in China. Internet give you plays how to play it. All right, what we talked about quite a bit this morning is the top gainer of the past 5 days, and I barely had to change the writing from this from last video on Thursday, Friday. The number one gainer, we talked about a chunk this morning. Gold miners up 15% over the past 5 days, or 3% a day. Look what's happening now. You always wait for the candles to start to cut in half, start to get less excited, and then start to establish itself. Look at this. GDX, the gold miner, spending itself in hell since mid-May due to the higher energy cost of oil, legit margin pounding, compression, hellacious for them. GDX right here on the chart put in a floor at $70, dealing with it. Market saying deal with the energy costs. They're saying fine, we're dealing with it, as well as the war potentially ending. And then this right here, we talked about this morning with JC. These are 3 closes now above the 200-day moving average. The reason why I was topical was the last time I was on the show was May 18th. I said, look for this group to fall because of the higher energy costs, and it happened the next day. And it was in purgatory until this very week. So it's kismet. or I think is that the phrase, or it's Xanadu. I like making up stuff, or if that's not really real. So the gold miners here, I'm not sure if we talked about, exact short term, what we were going to do. I think we did actually. Yeah, recommended the calls. This was his favorite because he said I like to play many games, which is true, I guess. So the money flow, the SPY relative strength versus gold miners has been crap since May 11th here. A lot of stuff broke down. Once this got to Kembate at $97 was, got punched in the face. Level 2 was May 19th. Once it broke below the 200 moving average at $84. Yikes. Evidence B. And then right here again, it couldn't deal with it mid-June at $87. Now is true absolute strength. These past 3 days on the door, it hit 71 RSI on yesterday. Today's 69. Each passing day that it closes above 87.60, 87.70, because it goes up every day, is very constructive. What I do believe, though, is that similar as what I said with S&P. It hit its head at 775, and I bet you there's a wall of open interest here at about $91. I think that's a short-term top, what I think is more than likely over the next 2 to 3 weeks. And he also, I think, agreed with this, is that this starts to move, potentially giving a discount towards $79 to $80, $81 area, giving a rare invitation to get long. I'm very curious to see if this wall of $88 holds. It's been very strong in the past 3 days. The money flow also, the past 3 days, these surges, look at the candles going crazy. But it is important to know why we're talking about it. Top gainer in all of ETF land over the past 5 days, up 3% a day. What's it doing today? Down 70 bips. So not only has it gotten less excited, up 2.5%, up 2.5%, pretty consistent, up 7%. Oh, let's do shots. Fun times. It wants to go up higher. Next day, up 30, digestion. And now, boom, up against a major level of a 200-day moving average, or of a yearly average. The market's saying you are worth 87.5. It's saying, guess what? Closes above it that day, 2 days in a row, and today's it's more than likely going to do it 3 days in a row. VWAP 89.83. It is there, right there, right now. Hopefully it doesn't reverse. Otherwise, could potentially serve as a magnet towards 88 even. Like I said, I think it's going south. You could potentially sell the 91 end of August calls. I like always buying something against it, even in a ETF where there's more homogenized risk or flattened out risk. You just have to run risk management properly. And look at this also. This is what you want to see, going back to the China chart real fast. Sometimes you don't have just a purge of 2 weeks. Look at this kind of hell. It put in the highs here March 2nd. Literally the weekend of the war, and then vomits down 9% because oil just ran up and not lights out almost for this group. It slowly bleeds lower. Nobody wants it, essentially, because I'm trying to count the days above 50 RSI. Chunks here in May, probably when there was ceasefire or rumors of more ending of war. Not much here. June 16th got an oopsie. These 3 candles this week is very, very formative. Typically would mean we have lower energy prices as well, and gold is stabilizing. So you get those 2 levers, commodity trade within one, almost 2 for 1, a twofer, as they say. So look for this one, though. I still think this one's going to go towards 79. So I already suggested the selling. What you do there, I also don't think it's going to blow its brains out right here above 70 RSI. It looks like there's some resistance there, although it looks thin at 91, but I still think it's going to hold short term. We shall see. Other trades you could do, because it's not my thesis, but you can go out and do the October 79 puts, just because I think this one does mean revert. And again, this rally began, I count this part of the rally beginning here at $74. So you went from 74 to $91, rang a bell. What is that? 15, 16, 17 bucks. So it's pretty monster. We're talking about it on Friday because it was a 20% gainer. Now up 16%. Number one in your hearts. Gold miners today also down 60 bips. Look, the energy running out a little bit. That very curious to see what happens at the 88 even mark, 200 moving average. I think it breaks just a little bit. All right, number 2. It's interesting that gold miners are the number 1. There are divergences always exist in the market. Number 1 gainer, because guess what's number 2? Oil. Over the past 5 days, oil up 9%, almost 2% a day. This one up again today, continuing its trend. Look at this. Remember, that's very important to Kembe. USO at 142, and it got to Kembe hard all the way down to 115 on August 5th, just inside of 6 days ago. We said, has oil begun its ascent? Is it done? And I said before, I would almost want to be a lazy trader for this. I still do cycles, right? There's the end of the bullish accumulation phase, 23rd on around 15 days, depending on volatility. I guess it sounds a little bit simple. That's where there's more art and science applies. Typically somewhere around the August 8th, I would say look for this to get ready, to get going. It actually bottomed on the 5th, very news-driven ticker. And then I said the confirmation would be a close above 122. And we started getting that close just yesterday, August 10th. It closed at 126, and today even it's up 60 bips and looking to close somewhere around 127 handle. A lot worse things you can own than oil. I think this one is headed to, just looking at the chart, truly 138, 139 to get to Kembate again. Potentially, this looks like a kind of sloppy looking W here, and I think that's what's shaping in the chart. So it was a little bit confirmation late just because you got that final close here, but I do think the race is on to get those about, what did I say, 139 or about 13 points from here, or nearly 10% jump in oil. Potentially talks break down, or Oman or your mom or Pakistan, whatever. Stuff could happen and things move higher a la oil here. So I think that goes to about 139. How to play it. Look at the rising 200-day moving average too. This looks like, better than semiconductors. Semiconductors touched and lived in purgatory. Oil has not been anything in there since the end of January. And that was, again, pre the war, with a peak of mid-May when things were really ratcheting up there. And I think Trump saying we're going to blow it to bits like it's the Lego movie. It peaked at 154, and then obviously a lot of give back. So trades, yes, trades. That's what we're doing here. It's what we're here for. Probably I think they have a lot of strikes here. Bullish here. I think it has a bullish accumulation over the next 2 weeks, 2-3 weeks, with a head of around right near 140, to be frank. So I'll go out to the October or November, one more than likely 140 strike, and you can always sell something against it. Some don't. Something within 21 days for that theta decay, typically something like the same strike called a calendar, or you can drop that leg and not do with it all. Otherwise, I believe you can sell. This is probably juicy. 16. You could probably sell the end of August 116, August 28th, 116 puts. Actually, probably better one is 114 puts. You give yourself that loan. I like that in terms of duration, with 17 days ahead, and giving yourself at least that if the dam breaks, giving yourself that 1 month low. So that's what I would do there. Oil looks like to me like it is going higher towards that resistance point to get the Kembate at the same point from the July 23rd highs, when it ran 6% that day and then ran out of gas. Okay, let us continue on. That's US. Oh, and the third best thing this week, dug in exactly where you wanted it to, where you needed it to, silver. But look what's happening here. Silver up 9%, exactly the same as oil. They went into all the dollar denominated. Why, you wonder? Because the dollar had also a fall from its 52-week high. I did talk about this on the show this morning. So they went into things denominated in dollars, like a gold, like a oil, like a silver. So silver still living in hell. Here, I call this hell because you've been in it for quite a while. June 9th is when it fell into hell. That is under 200-day moving average. The 200-day moving average is going up by about 7 cents a day. I do love the way it stuck the landing there at $49. Don't forget, this thing got to Kembate on May 13th at $81. The very important level we're following here is 64, as in Nintendo 64. Probably still my favorite video game system till this day. That's the level we're looking at here. I think, it doesn't matter what I think, but look at the candles recently. Why we're talking about it? Silver's up 9%, the third best performer in all the land, up an almost 2% a day. But today, reversal down 1%. And look at getting the Kembate near term, a very important level. It's been not really able to deal with 60 even. And here we are, 58.75 VWAP, or volume weighted average price, 58.64. They like it to the tune of about 10 cents higher. I do like obviously the curling higher and momentum of the medium or shorter term moving averages. Your 21-day exponentials at 54.60 here. You're starting to get some stabilization, shockingly, out of the 50-day moving average at 57.06. If 57 even can serve as your new floor, I don't think it does. This thing's going to race towards $64. I think it's done for now due to this rally truly beginning July 21st here. So I'm doing, a little bit of and again, it's silver. So you look at the average true range, my God, it's $2 on $59 stock. So this thing moves like crypto used to. So silver, July 21st, I have the run starting at $53. It just went to $59, rang a bell at 6 points or greater than 10%. And now we're talking about it. That's where what I think is going to happen is a descent over the next 2 to 3 weeks, a mean reversion to $55. Nothing ugly about that. Whoops. Nothing ugly about that. Screen going nutsy. And that will likely more than correspond with a 50 RSI. And I believe the silver is going higher. Straza was very bullish silver. And he thinks the thrust is here right now. I think it's going to consolidate a little bit and go to 55 and then start to get this. You want to be careful though, that 200 moving average more than likely starts to just be a Mexican standoff flat line at 64 bucks. Trades, just doing in terms of the chart, it's contrarian for now. October, 55 puts. And you can sell something against it if you like. Alternatively, you could sell, be careful. This one still has vol though. I would sell the end of August 28th, 64 calls. That's how we do silver right here, the third best gainer in all the land. All right, let's keep it moving. Only 3 more to go. 3 losers. They're selling 3 things for the past week. Volatility, meaning they're basically buying the market, selling those puts. Volatility down 5% over the past week or 1% a day. Look at that. Even in a market where SPY is down 20 bips with no volume. Everyone's out to the beach, essentially. It is a nice day. VXX is down 10 bips. Look at this. All-time lows yesterday in volatility. Market saying, we ain't never scared. Only God can judge me, that type of thing. I said before, look for volatility to VXX to stop this purge lower when I see a 19 handle. Yesterday was very cute, 2002. Today's low is 2008. I want to see that 19. Yes, it corresponds with other things. There is CPI tomorrow. Let's see if we get it. 19 likely for me. Here is the floor. And then you will get a dead cat bounce over the next 2 to 3 weeks to about 21.5. That's all you're going to get to VXX. Probably gives the world a little freak out. Going back to this, I don't want to kick a dead horse. And again, no trades because volatility is more of an environment more than anything. Second, again, the not only the biggest loser on the day, the second, or really the biggest loser on the week, Brazil. We already went through the trades and everything else. Brazil, yikes, the worst place to be week over week, down 5% over the past week or 1% a day. Today, down 3% alone. At least hold VWAP, pathetic. It's percent below VWAP. They're trying to exit Brazil. Again, if this Swiss cheese, however you say that in Portuguese, rhymes. If this 33 half floor breaks, look out. It's probably headed towards 31. Not my base case, but look out. They are running for the hills. And then, of course, when we're talking about oil being on that top 3 list of greatest gainers, what are you going to have as the greatest losers? Same, it's another side of the same coin. Jets, airlines, because their costs just went up. Compression for their margins. Airlines, a beautiful run here to 52-week highs. Look at this. This run started aggressively on July 23rd at 20. What was the off that day? $29. Look at this run. And the clear Dikembe, the rejection, if you somehow don't understand that. August 5th, a week ago or so, at 34 even, and then a big move lower to 31.5. Right here, I like the space. This obviously was very bullish every time peace talks, end of war stuff happens. I think this one bullish accumulation phase has ended. You could see that to me. It literally looks like an exclamation point right here. Look at the long line and a dot at the bottom. This thing has to get some breath. This is very interesting. Why we're talking about it. It's the third biggest loser, down 1% a day. Today it's up. High momentum assets like this, typically they really stick a landing like a cool skateboarder and then they go the other way. I'm trying to pay attention here to the pattern and where the previous price discovery was and how important this 31.5 level is. Markets have memory in airlines, again, also holding above 50 RSI since the end of July, since the 27th. All that being said, I believe is going south for the next 2 weeks, holding in around that 31 handle floor. If they really, there's a chance they visit this to $29 when I see this falling apart. There's a chance, but no lower. How would I play it? Overall constructive story, short-term bearish. I like selling those 30, whatever's closest to 33 half calls for August 28th. Alternatively, always give yourself time. I would buy the October counter trade because I'm ultimately bullish, but I would buy the October to play the next 2 to 3 weeks out. Buy the October 31 even puts, again, your style. If you want to sell something against it, 2 subsidize. All right, as we get out of here, top 3 trades of the past 5 days. Long gold, you're in these spaces, you're crushing the market. Long gold miners, talked about a chunk this morning on the show and on this show. Second, oil. It's begun. It dug into teals where it had to, and I believe it's moving a bit higher. We told you how to play it. And then long silver, also what it means for that. All right, peace. We will see you Thursday or Friday. Also check out John Salama at Substack.com. Peace.